that this has been a good session. A few stocks that have moved up. Indus Towers has moved to the high point of the day, and Federal Bank as well. Now that's bucking the trend. It's up close to around 4.5% as we speak. TVS Motors, the numbers come up for you on the screen. Exports have taken a hard knock. In fact, they're down by close to around 50%, I think, on a year-on-year basis. So we should get that number up for you on the screen. We'll get that in just a bit. The split between exports as well as domestic, that'll be up shortly. Bajaj Auto earlier this morning said that yes, exports continue to remain under pressure, but there are signs maybe the next few months that things will start recovering out there. In the meanwhile, let's get in Mitesh back. Mitesh, what are the calls you have for us today?
So, Nigel, India Cement is something which I would want to recommend as a BTST. That's BTST with a stop below 190 for targets of 197, 198. And LIC Housing Finance is the other one. That's the BTST as well. Keep a stop below levels of 350, half here and a target of 362.
Okay, got that, Mitesh. Thank you very much. For what it's worth, the market's practically at the day's high. It actually is, Prashant. I mean, I know you're the one who's tempering our enthusiasm, and for very good reason. But the manner in which the day's move has happened, the fact that we're not sort of slipping off and there's no indecisiveness, so to speak. Perhaps, I mean, the bulls might want to take some heart from that.
No, they should. And the great thing will be if overnight in the US, the dollar cools off, yields are lower, some data which comes. I mean, for example, yesterday we had the consumer confidence numbers out of the US, which does show that 6 months out, expectations are that there will be no income growth, etc. That's so, I mean, you need, there has been too many 5 or 6 data points over the last 1 month or so, which have been too strong, right? So you need something to turn that around. I was pointing out this morning how the US 10-year, if you look at it, that's been hesitating for the last 3-4 days at about
just below 4%.
So it's possible that because it's so overbought. I mean, we see a bit of a pullback, a cool off, and that can kind of extend the rally here a little bit more. But I take what Ajay said earlier that it's looks like this has got a little bit more to go. I mean, yields on the dollar, etc. It's not going to settle down immediately. That is not how these things play out. So it's a long drawn-out process.
Prashant, the bulls are cheering for you. They're saying that hopefully we get this overnight handover that is positive. But irrespective of that, I think earlier this morning when we woke up, the dollar index was 105.
Just under 100,
Just under 104.93 or 94 odd when I woke up. That's one of the first things that I look at when I'm making my notes. And it's come down to around 104.5 odd. So that's been a good...
So it's come off already.
Yeah, it's come off. I mean, let's pull up the dollar index. So that's a positive as well from emerging market perspective. Some cooling off on the dollar index. That's a meaningful...
There's a 0.5% is a pretty meaningful move on the dollar index. And I think... so I think, I mean, this is the kind of stuff that you want. You want dollar lower. You want yields cooling off a little bit more. Take out 4 out of the equation for now. Equity markets in the US, the S&P, for example, it closed just under the 50-day moving average. That it comes up above it. So more positive, reassuring kind of handoff, and maybe this extends for a little while more. Survey.
No, but folks, I'm just saying there's another piece of data that I looked at which came out of China, morning hour time, and that was a super hot PMI manufacturing number. It's the best we've seen in a decade. It just got me thinking, even when we didn't have a global problem when the year started, the money was anyway moving to China. We've seen what the Hong Kong market has done today. Technology, consumer stocks, restaurants, all kinds of stocks are flying in China. I'm just wondering if that shift will keep continuing, or whether people will say, okay, fine, we have some valuation comfort in this market at 18 times forward earnings. Maybe at least incrementally allot some money to India as well.
I mean, it looks like it. I'll tell you, I think Bank of America at one point put out a research. I mean, they did some work going back 20 years. What they found is that tactically this shift does happen when when funds go overweight one market, too overweight or too underweight one market. Tactically, money moves from one to the other. But generally speaking, when emerging markets get money, all markets do well, right? When emerging markets as a category, because India gets 95% of its money through global emerging market funds. So when that category gets money, everyone gets money according to their weightage. 30% for China, 14, 15, 16%, or whatever the weight is for India, the last number. So, the numbers, the PMI numbers were super strong out of China, which does underscore that consumer demand is strong. It's positive for metals to begin with. Well, on the sidelines of the NASSCOM Technology Conference, and there's a leadership forum, we spoke with Krishnan Ramanujam, President of Enterprise Growth Group at TCS, and he's also the chairman of NASSCOM. He addressed that the CXO survey has shown cautiousness among clients. Listen in.
The survey broadly points to